Welcome to our Market View presentation, where we will be forecasting the currency pairs of the Australian dollar to the US dollar and the Australian dollar to the Japanese yen in the next 3 to 6 months. My name is Ella, and today I'm here with my colleagues Steph and Beth.
Firstly, we will provide a brief background into the United States economy in relation to the Australian dollar.
The United States dollar, the USD, is the most traded currency in the world and acts as an intermediary for major currencies. As evidenced in the graph below, as of April 13th, 2018, one Australian dollar equals 0.7754 US dollars.
Now, we will provide a brief background into the Japanese economy in relation to the Australian dollar.
The Japanese yen is the official currency of Japan. It is the third most traded currency in the world and the most traded in Asia. Currently, the exchange rate is at 83.61, according to the Reserve Bank of Australia, the RBA. Therefore, one Australian dollar equals 83.61 Japanese yen.
In order to further analyse and forecast the two currency pairs, we will be discussing the four fundamental components that determine the foreign exchange value of a currency. These include relative inflation rate, commodity prices, relative economic growth rates, and relative interest rates. Relative inflation can be shown in the following graph.
According to the Australian Bureau of Statistics, the ABS, Australia has witnessed a gradual increase in inflation rate from January 2015 to January 2018, as seen below, with current inflation rate of 1.9%.
In relation to the United States, as seen in the graph below, inflation rate is currently 2.4%, which is the highest inflation rate in a year, boosted predominantly by shelter and used cars prices. As this is greater than the Australian rate of 1.9%, the USD will begin to depreciate against AUD, which in turn will start to appreciate the AUD.
Now, in relation to Japan, inflation rate currently sits at 1.5%, as you can see. And according to the Bank of Japan, inflation rates are forecasted to continue growing at a moderate rate throughout 2018 in the next 3 to 6 months. However, this pace is projected to decelerate due to a cyclical slowdown in business fixed investments and the effects of the scheduled consumption tax hike.
Now, focusing on commodity prices in Australia. If Australian export commodity prices continue increasing because of inflation, overseas importers of our goods will rely on other countries. As a result, the value of our exports will fall, as well as the demand and value of the Australian dollar.
In 2016, the US was the largest importer and second largest exporter in the world. The US has had a negative trade balance of $783 billion in net imports. If commodity prices continue to decrease in Australia, it is expected that the AUD will depreciate against the USD. However, if commodity prices in the US decreases greater than that of Australia commodity prices, the USD will depreciate against the AUD. Australia can take advantage while commodity prices are low in the USA, as the US exports will be cheaper than purchasing domestically in Australia. As a result, the USD will appreciate as there is an increasing demand from foreign countries.
According to the Central Intelligence Agency, the CIA, Japan is the fourth largest export economy in the world, and in 2017 exported $683.3 billion worth of goods. In 2017, Japan also had a positive trade balance of US $57.6 billion.
If the value of Australian commodity prices continue to decrease, the value of Australian exports would decrease, which would result in a depreciation in the AUD. Subsequently, Japan would benefit from such a decrease as they require low commodity prices of goods such as aluminium and steel in the production of cars. As a result of lower commodity prices, Japan is able to lower the cost of production in car manufacturing, which will lead to a rise in exports due to the lower price. This creates greater demand for both the goods and the yen.
The third determinant is relative economic growth rates. The result of high economic growth leads to an increased demand for imports, which will therefore increase the supply of the AUD. It also leads to an increase in overseas borrowing in order to finance increased investment, which will therefore increase demand for the AUD. According to the ABS, Australia is currently witnessing a GDP growth rate of 0.4%.
USD growth rate is currently 2.9%. And as this is greater than Australia's 0.4%, there will be a higher levels of economic growth experienced in the US, as there will be an increased demand for imports. As a result, the supply of USD will be increased. There may also be an increase in the level of overseas borrowing. Therefore, there will be an increase in the demand for the USD. This means AUD will depreciate against the USD.
In terms of Japan, in the December quarter of 2017, they experienced their 8th straight quarter of expansion of 0.4%. This growth rate of 0.4% is the same of that of Australia, meaning that neither country will experience greater economic growth than the other. However, by 2020, it is forecasted that Japan's growth rate will reach 0.50%, compared to Australia's forecast of 0.80%, meaning that it's 0.3% less. So, by 2020, there will be greater demand for imports within Australia compared to Japan, which will lead to a greater increase in supply. Additionally, the demand for the AUD will also be greater due to an increased level in overseas borrowing.
The final determinant is relative interest rates. The effect of an increase in interest rates would lead to an increasing demand for the AUD, as a higher interest rate encourages capital inflow and a decreasing supply of the AUD as it discourages capital outflow. The net effect would be an appreciation of the AUD. This can be presented in the graph presented on the screen.
Additionally, interest rates can be represented in two different forms, that is, nominal and real interest rates. If nominal interest rates are high, because real interest rates are also high, this will lead to a capital inflow and appreciation in the nation's currency. However, if real interest rates remain constant and high nominal interest rates occur, this will reflect in high inflation rates, which will therefore lead to a depreciation in the currency as a direct result of the high inflation.
According to the RBA, Australia's cash rate currently sits at 1.5% as at the 4th of April 2018, which is a record low for the country. It is forecasted that the economy is expected to grow faster in 2018 as a result of positive business conditions and stronger exports.
The Central Bank of the United States is the Fed. In March 2018, the Federal Reserve raised a target range for the federal funds rate, which was a quarter point to 1.5 to 1.75%, which was in line with market expectations. From 2008 to 2015, the interest rate in the US had remained unchanged at 0.5%. However, as seen in the chart below, as of December 16, 2015 to March 21, 2018, the interest rate has increased by 0.25% every change date.
As of April 2018, the Reserve Bank of Australia left the cash rate unchanged at a record low of 1.5%. As the United States 1.75% is higher, investors will choose the US to invest in as they enjoy more return on their money in the US banks. Therefore, USD will see value of their currency increase as a result of higher demand, while AUD will depreciate as demand decreases.
The Bank of Japan's interest rate is currently negative 0.1%, and it is relatively far off from the target of 2%. However, monetary policies remain unchanged to this day in order to further correct this.
By adopting negative interest rates, Japan has weakened their currency against the AUD. Specifically, at this rate of negative 0.1% is low, it encourages investors to invest elsewhere into countries such as Australia with an interest rate of 1.5%. Thus creating greater demand for the AUD, which leads to an appreciation against the Japanese yen.
In conclusion, in the next 3 to 6 months, it is forecasted that, overall, Australia is likely to depreciate against the USD. Forecast for a weaker Australian dollar, which reflects the trend of the weakening US dollar as monetary policy tightens, and it is expected that the Australian dollar is to show a slightly smaller depreciation of the currency's value relative to the US dollar in 2018 to 2019. And overall in Japan, if commodity prices continue to decrease in Australia, it will decrease the value of Australian exports, resulting in a depreciation of the AUD against the Japanese yen. This will further aid in the depreciation of price levels in Japan due to Japanese imports from Australia. Thank you very much.